Welcome to RANsquawk's e-morning briefing for Thursday the 14th of January 2010. And so far, with little in terms of economic data out of the Eurozone and any pertinent or major driving news flow, Bund's pretty much flat. Much of the expectation there is forward looking to the ECB rate decision, where it's pretty much a non-event in terms of the actual interest rate itself. That is, according to most analysts, unanimous to be kept on hold at 1%. The press conference, as usual, will grab most of the attention. That'll be at 1:30 London time. Most anticipating much of the questioning to be in regard to Greece. However, Trichet unlikely to change any of his rhetoric, just saying that they do need to address their current problems. Other than that, in terms of equity markets, we are in minor positive territory. We're up around 0.5% across the FTSE, CAC and DAX, being driven by basic materials, with WTI crude futures rising up around 50 cents, back above the $80 handle this morning. Elsewhere, in terms of actual news flow, a couple of Fed comments just to be aware of. Relatively dovish coming out of Fed member Dudley, who said that it would like to see a more vigorous economic recovery and a drop in the jobless rate before the US central bank raises interest rates. Dudley also went on to say that extended period means at least 6 months, so pretty dovish tones there. However, on the flip side, saw Fed's Evans say that leaving highly accommodative policy in place for too long would eventually fuel inflationary pressures. So a little bit hawkish there, following on from those hawkish comments from Plosser in yesterday's session. In terms of elsewhere, as we head into the earnings season, we'll have Intel after market today, but we'll also have JP Morgan, they're the first of the major US banks there to report tomorrow. According to a Bloomberg article, they wrote that fourth quarter results tomorrow may say that profit more than tripled from the depths of the financial crisis in 2008 on a rebound in investment banking fees. And most of the other major investment banks, they're due to report next week. Elsewhere in the currency markets, a notable mover has been strength in the Australian dollar. That was after overnight the latest employment data came out much better than expected, coming in at 5.5% for the month of December against expected at 5.8%. Elsewhere in the UK, cables hit a fresh 1 month high. We're up at 163.15. That was following some comments out of the rating agency Moody's, who said there is enough consensus in the UK to support a AAA rating. Looking forward then into what we have today, ECB rate decision, that's at 12:45 London time. In terms of US data though, we'll have the weekly jobless and also the advanced retail sales reports, so quite a few things to get through in the US section. That's allied as well to the final in the 30-year note auction to conclude the Treasury's sales for the week. That'll be for $13 billion worth. And then for equity traders, we'll also have Carrefour and Pernod Ricard out of Europe to report after the European cash close.